Joining us right here on ET Now, an extremely special guest. It's indeed a pleasure to be talking once again to Mr. KV Kamath. Thank you very, very much for being with us, sir. I'm going to first begin with the big picture and then talk about the new development bank and trends and NPAs and all of that. In the last couple of years or perhaps months, populism and protectionism are the emerging themes that the world is grappling with and one is seeing. Where is India amidst this all, and what risks or challenges do you see going forward?
Well, I would probably concentrate on protectionism, and that's relevant not only for India but for almost all, at least in our context, emerging countries.
That's right.
But I would only say that protectionism is not a one-way street. It would have been a one-way street if the emerging countries did not have buying power. Today they have buying power, so it becomes a two-way street. So I'm sure it will be looked at in the current, in the appropriate context as we go forward. Just to put that into picture, the 5 BRICS countries account for over 2/3 of global incremental trade.
That's right.
Incremental growth. So you can see the power that is there in the hands of just these 5 countries. So I would say that protectionism cannot be a one-way street.
So when you say protectionism is not a one-way street, you're not somebody who's losing a lot of sleep over the rhetoric that's coming in from the US or the fact that Brexit will be a reality considering it has been triggered by Prime Minister May. You believe that this is a rhetoric and even nations who begin to look inwards will have to pay a price for being protectionist?
Well, again, I don't want to comment on whether it's rhetoric or whether it is meaning. I'm just looking at the externality that this is a two-way thing, and the narrative has changed, the balance has actually changed to the emerging economies where there is the flow, the direction of the flow has changed, and that has to be recognized so that the dialogue continues in an appropriate manner.
Before I move any forward, what brings you to India is the new development bank and the second annual summit. Just want to quickly touch upon the kind of role that the bank has played and the bank aspires to play in the India story, particularly in infrastructure projects. We've seen gaping gaps there, and the bank, you have said, is keen to invest $2.5 to $3 billion in that space. Will you help us understand some more plans there?
Yeah, I think our focus is primarily sustainable infrastructure, and within that we said the initial area of focus will be green energy. And the first year, largely we looked at green projects. We ended up doing around 7 projects, about $1.5 billion for the first year. This year we will look at $2.5 to $3 billion, about 15 projects. Last year in India we did what will be an energy project through a bank and what will be a road project in Madhya Pradesh. This year we have lined up several projects in different spaces, including water, roads and so on for India. As we go along, I would think that we will widen the scope of play. Why so? Because we also have to build our own skills in appraising these projects. But by the end of the year, I think we should be skilled to look at a wide area of projects, and
so
then we will.
When you say a wide area, you mean newer industries, newer sectors?
Within infrastructure itself, things which are different. For example, things that we could do in the urban space and so on and so forth. We will develop our own internal skill sets.
Just before I move very quickly to bonds, and that's something that you've spoken about, has it been easier now in this year to look at investments in the infrastructure space? Have we at all covered any distance in the infrastructure gap that existed in India?
Well, I think what I see in India is a very well set mechanism in terms of creating a pipeline, at least in the government sector, and then looking at how it could be funded internally, externally and so on. So there is a steady flow of projects that come from India and a pipeline that builds with us, and I'm sure with other institutions also. So that continues at a pace.
You have spoken about bonds, rupee denominated bonds in this market. Is that something that's on your immediate radar?
Yeah, I think we are looking at it in the second half, probably July is when we will look at a masala bond issue. So we will plan for that target. In the meantime, we will have to get our own global rating done, and then proceed.
I want to move focus to talk about some of the big reforms that are being undertaken in India, and as someone who now has the advantage of being the global insider on India, it must be a proud moment to see the GST being finally passed by Parliament. It's been in the making for 10 long years. But are we overstating the case of a GST? Are we being irrationally exuberant about it? Because this is not the perfect GST. This is a stripped down version of what was originally envisaged.
Yeah, but I would think that this version is better than the structure that we had in the past. And I'm sure this version will work. What we have for reference is the sort of economic boost that this would give. And the reference point last time around was 1 to 1.5%. Of course, some pundits said it higher. But I'm happy even if this adds 1% to growth and simplifies the process. Because if process can be simplified through GST and process can be simplified through the exercise that we have done on, I call the technology exercise or demonetization.
Yes.
These two things together then make the whole way you do business much more elegant in the country.
And at what stage do you believe government, policymakers, state governments can look at inclusion of some of the big ticket items that are being left out right now, whether it's real estate, petroleum or alcohol?
I would think give it time to settle, and then I'm sure.
But you're someone who's optimistic that
I'm very optimistic.
This will perhaps be included. I think we must talk about the elephant in the room, and that has to be about the non-performing assets, because that seems to be this big albatross around the neck of investments, along the neck of growth and all of that. Is the current mechanism to resolve NPAs enough? I mean, the government has had a lot of talk about it. Banks have been mentioning it for a while, but nothing seems to be moving. I mean, look at where the NPA has ballooned to, 7 lakh crore rupees.
No, I think let's look at it in perspective. I would think the first major step, and that we have to give full credit to the Reserve Bank, was taken by the Reserve Bank in initiating the exercise to recognize what is NPA. So that has been recognized. And to me that is a big step, because from there you can go to the next step, which is the resolution of the NPA. I think that's where I was heartened to see the statement of the Honorable Finance Minister saying that he would now push resolution. I think you need to push resolution, because with the provisioning done, I think we are ready for resolution. So we should get to that stage of resolution so that you know that you can now put the asset back to productive use. I think that itself eases the systemic pain and the burden. So I would fully support this urgency in terms of getting resolution done.
If I may ask you 2 questions, you're right in giving credit to the RBI, which almost waged a war against non-performing assets, and then came demonetization. So many people thought that banks defocused from what they were really doing. In that sense, do you believe NPA resolution has been delayed on account of demonetization?
No. The reason is that the resolution process, if at all it's delayed, is a decision-making process of the bank heads. And a structure has now been put in place where there will be an outside set of people who would also look at
the oversight
oversight on this process. I think the demonetization process has not derailed it, because recognition is going on through October right up to December. So I think this much time is, and in the meantime, the banks have been busy doing the workouts. It's not as if they've not done the workouts. It's now basically to look at the workout and take a call what is left. And the good news to me is it is not a very large number of cases. You probably resolve between 50 to 100 cases, number of projects. And you have resolved probably 60 to 70% of the systemic problem, which will allow you to breathe again.
What can be the innovative out-of-box ideas that one could look at? Because I'm going to come to who will foot the bill and all of that in just a bit, but there is an oversight committee. The government hopes to empower it even more. Who's going to take haircuts? Those kind of decisions are very tricky decisions.
No.
So what could be
it is not that complex. The haircut has to be basically taken by 2 parties. There are only 2 parties to this deal. The promoter and the bank. And I think there has to be a haircut on both sides, otherwise it's not workable.
But isn't that where the
This is not something new. We have done this in 2001, 2002.
Yes.
So there is enough experience in some parts of the system as to how it works. So the haircut can be taken only by 2 parties, and there are only 2 equations here, equity and debt. And part of the equation is that loans will have to be written off. part of it is loans will have to be converted to equity, and the sponsor, as I said, has to take a haircut, and that's where you do it. After that, what you do with the asset? Now the asset is ready to be put into productive use. Whether you allow the asset to sit with the sponsor or take it out and sell it is a separate issue. But the first issue is not getting resolved as to what is the extent of the haircut, what makes it productive, what makes it being put back into economic use is not determined.
I agree with you, and I'm at least glad that you're being candid that is where the issue really is. What is the hesitation? Are people afraid of taking a decision because it is discretionary at the end of the day, it's subjective?
And I don't want to get down that path, because that's something that the Indian banking system has to answer as to why is that decision not being taken.
It does lead to the other part of the debate, that while NPA resolution is all right and it will perhaps spur growth and will crowd in investments until unless NPAs are not resolved, the other part of the debate is who should foot the bill. I mean, yes, banks and promoters should take haircuts, but if the government were to get involved, the whole infusion of funds, who ends up footing the bill is the other moral question that raises.
If the banks have taken a 30% haircut already through provisioning, because that part of it is done.
That's right.
Of course, you can still convert part of that loan into equity.
Yes.
They should do that. And then I think you have got, you're prepared for the next step. Otherwise, we are only discussing in theory. Because thereafter, there's a question with all this done, what is the extent of capital that is required in the banks? So that has to be determined. There are numbers there, 250,000 crores, I see a number.
That's right.
But once you do this, you will really know what is the extent and how could that be met. But let us do that first part, get the asset back to use. And then you look at the banks in a completely different context.
A lot of people, a part of the public discourse is a bad bank. Do you believe that's a part of the solution to the problem that we're talking about, or do you believe that's perhaps postponing the problem to the future?
No, we're not postponing anything. But the first step has to be taken. What is the haircut required and by whom, to what extent, to make that asset viable? That decision has to be taken. That decision is not taken. If that decision is not taken, whether you take the asset off the book to a bad bank or keep it in the existing bank is theoretical, because that first decision is not taken. Now, you want to go to the second step of putting it in a bad bank. It's an excellent decision. If you tell me that, let's say 7 lakh crores is the bad assets in the system, and let's say the value of that is 500,000 crores, do you have a bad bank with that much funding capacity to take this asset off the books? Otherwise, it is of no purpose. So that is where the real challenge is.
What do you believe will aid or enable speedy decisions on who's going to take how much haircut?
No, this is, I think, a very simple thing. The key today is entirely with the banks. They are in a position of strength, and
but
they should
take the
take
ones
the
who are
call.
not making that call.
But they have to take the call, and their shareholders have to ask questions as to why are they not taking the call. They are answerable. They're answerable to their boards. They're answerable to their shareholders.
This overseeing committee that is supposed to be constituted of 2 people who are overseeing things from the outside, do you believe it needs to be empowered with perhaps some legislative push or some legal push of sorts?
No, my own...
just to ring fence a decision being taken.
What I understood was that structure itself was had started moving. Before there was again the whole thing stalled in terms of banks coming up with proposals. But again, I sit at a distance, so I'm not privy to exactly what is happening. All I can say is the first step in identification was done. Resolution is now the key, and that is not being done. There has to be a time-bound program. Riot Act has to be read. There are boards which are responsible. There are shareholders who certainly can ask for accountability. And if you do that, I think you get to the next step much easier. And this idea of having an oversight committee, I think, is an excellent idea, because that relieves
the decision,
some of the
pressure,
the difficulties that might be there in the system. But nothing prevents you from doing the base case workout. I think, can you not put a time frame that in the next 90 days we need to have base case worked out for all the stressed assets?
That's right.
And then in the interim, look at how this how the next step is taken.
Mr. Kamath, I also want to talk to you about something that has been spoken about, written by some commentators there, that instead of looking at restructuring of individual projects or individual cases, because most of these cases that are stuck perhaps belong to one sector or the other, you know, the laggards are perhaps power and largely infrastructure in that space. Should the government not as a policy measure look at restructuring of, restructuring packages for sectors instead of just assets or projects?
No, I think it honestly should not make a difference, because you will have to look at each case, whichever sector it is, on a case-to-case basis. It cannot be an all-in-one solution. The extent of haircut cannot be uniform. Even when you look at what was done in 2001, 2002, individual cases within a sector had completely different structures, but they all went through under one package that was approved. But the ground rules were specified by the Reserve Bank.
That's right.
And I don't think there is, and that's absolutely appropriate. The ground rules are set by the Reserve Bank. What are the ground rules? That if you take a haircut, there are consequences. If you give a concession, there are consequences. Those should be very clearly articulated by the central bank. And within that ambit, how much you want to give is a decision that you take based on what restores the asset to health.
Do you believe, though, the scenario or how the landscape of Indian banking is perhaps ideal and paves the way for consolidation in the Indian banking space? We're already talking about Kotak Mahindra looking at Axis, the Suti stake. They very openly said they're willing to evaluate. I'm just talking about private sector right now.
I think that Indian banking clearly needs larger banks. So there is scope for consolidation. I think you need to clearly see that when you do that, and whether it's the public sector or the private sector, that it only adds to the health and the competitiveness of the sector.
Given the fact that Indian banking needs big banks, and as an ace banker, you saying it, the government has said it, should the government then be perhaps all right with a hostile takeover, in case if they want to be one like Kotak or Axis?
In a situation where you have a regulatory oversight, a hostile situation doesn't work in the banking business. So it has to be something that is worked out with all parties in sync, as it were.
And more amiable.
And to me, the regulator is a very important part of this. And see, because it has to be acceptable to the regulator finally.
And will we see perhaps mergers happen in the private sector space and less in the public because of the legacy issues that public sector
I can only say that there is a need in both sides of the table. There is need, because if you have to get to a very healthy system, then there is need on both sides of the table.
How is digitization changing the landscape of traditional banking
dramatically
in India?
I think it's doing what in 2002 the first push to ATMs did to banking. Nobody believed that anybody would use an ATM. When at ICICI Bank we said we will roll out 1,000 ATMs. I think that's what's happening in the digitization space today. When people are skeptical, but in a year's time you will say, how did we manage without digital money?
But is the future of banking traditionally is at stake because of wallets like the UPI and things like that?
No, the future of banking is not at stake. The way banks do business will be at stake. So if you are not current, you will be out of business. So traditional things that a bank does, you cannot replace it in a digital context. Those will still have to be done through means that are done today. Issuing a guarantee, acceptances, all those parts of the business will have to be done. What this will do is only the cash management part and impact the efficiency of the system. So those two things will be here. The traceability of the system. These are the things, but these are significant changes. Having said that, in a competitive context, certainly there is going to be a dramatic shift, towards incumbents across both sides of aisle, as it were, whether it's public sector, private sector, large or small, who are nimble enough to adapt to these technologies.
Will be the ones who will survive and be leaders. A quick
last. Be the ones who will do better.
Quick last questions, and I'm going to take a little bit of liberty here and ask you a question. You've spent many years as being on the Infosys board. First, as chairman, as independent director. Are you disappointed from a distance to see how things eventually played out between the promoters on one hand and the current management on the other?
I can't comment at all, because Firstly, I'm in a position where I can't comment, and secondly, I'm too distant to comment.
Could things have been more amicable?
I stay with no comment.
The Indian startup space, as we're seeing it, and I'm going to close it with this, saw a lot of euphoria, a lot of irrational euphoria perhaps, and now there is some kind of correction that's coming in. Is it a case of errant startups? Is it a case of regulatory oversight? What is happening in the space?
No. I think it's only my view from a space where all this is happening in at great pace is that things are moving too fast. And nobody who is in the space can afford to believe that this is a linear space. This space is changing dramatically. And what it is showing is it continues to be so dynamic that the rules of the game are getting rewritten every day. It is not a regulatory issue. It's an issue of changing space, changing context. And whichever area, whether you look at the retail space or the digital finance space or so on, I think the space is changing so dramatically that this is not for
As an elder statesman of India Inc., do you believe there is an issue of value system, a cultural problem, and what can some of these guys really learn from, iconic managers like yourselves, like Mr. Premji, that generation really?
No, I don't think, I think that these are, they are very intelligent, and I give them very intelligent managers. They are prescient, they have seen the opportunity, and they have executed well. What I think is happening is the various parts at play have not been properly identified.
What would you mean by that?
See, there's too much of shifting sands in this whole equation. And what tomorrow looks like, nobody knows. Whereas the incumbents have got a given base, and they know what that tomorrow is. But the new player doesn't know. And in that, probably the biggest mistake was to ride platforms which are not making money, and to believe that giving away money is all right. And for that, actually, you don't blame the startup. I would blame the people who invested in it. That you believe that in the real marketplace that we operate in, if you burn shareholders' money, are you going to be there in the next 6 months? So you were allowed to. But having said that, there are some very interesting products that and conveniences and services that have been offered. And one should see how those can be leveraged. But if you look at the digital space, the whole demonetization exercise has opened up the whole thing to everybody on the table. And what was the most interesting to me from a distance was the government came in with a couple of products which made it so easy for the banking business to do business. And that itself added to disruption. And nobody had factored these things in.
In the long term, from where you see it, I'm going to close it there, but I'm tempted to take one last question. In the long run, from where you see it, is remonetization on track? I'm not even talking about demonetization.
I think remonetization is, from what little I could understand, is already over. So I don't think that's in the minds of any bankers that at least I have talked to.
On that note, sir, thank you very much for speaking to us.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.